Welcome, Julian.
Noah, hey, I'm happy to be on.
Yeah, happy to have you on here.
Yeah,
We're at the top of the hour, too, so we can go ahead and get started here in just a minute. Just making sure everything is lined up. And then, all right, give me 1 sec. Alrighty, so good afternoon or good morning, good evening, wherever you are, Whale Coin Talk community. I'm here today with Dr. Julian Hosp. And Julian, before we get started, can you give us a quick background of who you are? I think our audience would love to hear your origin story, what you've been up to over the course of your life, and then how you found yourself working in the crypto industry today.
yeah, man. Thanks for having me. I'm originally from a very little town in Austria, so that's not Australia with the kangaroos. That's cold Austria in the middle of Europe. I moved to the U.S. for high school, Nashville, Tennessee. Went to high school there. Afterwards, actually wanted to study medicine in the U.S. And then I learned how to kite surf, and I was just at the right place, right time. Yeah, that was in 2003, and I became a professional kite surfer. Uh, I was 18 years old. It was yeah, best time that you could potentially have as an 18-year-old. I got paid by companies to travel the world and go to the best beaches and party, have fun. It was a great time. But yeah, I didn't leave the medical field. I still studied, became a medical doctor, graduated in 2011, and then worked for a year. Hated every single day of it, even though I thought it had been my dream come true, but it wasn't. I was missing the freedom and was missing all the craziness that kite surfing had. And so in 2012, I quit, moved to Asia, and I just wanted to do a medical startup. So that was my dream. My dream was to do anything business in medicine. I tried anything there was. And at the end in 2014, total coincidence, I stumbled across blockchain. And I thought, man, patient records on the blockchain, that would be so amazing. And I tried and tried and tried, and I just couldn't get off the ground. And so at the end in 2015, I moved here to Singapore. That's where I've been ever since. Today with my family, kids of three, my wife. But back then it was really for cryptocurrencies, so the financial aspect of blockchain. And yeah, that's at the end how I got into crypto. And in 2019, together with Singaporean, his name is Yuzen, we founded Cake DeFi. For us, it was all about providing this one-stop platform for people to get into DeFi, get into Web3. And yeah, this company is now 3.5 years old. We have about 1.3 million customers globally. And yeah, we always had this approach of full transparency. So we had this in 2019 already. All our services, all our products, completely transparent. You can see, track and trace everything. Back then, no one cared. In 2022, everyone cares about transparency. And so that's at the end why, yeah, our company is still there. We own the company outright. There's no outside investors. And it's been, yeah, a heck of an 8 years, and that last year kind of topped it off at the moment. Yeah.
And it sounds like a wild ride, Julian. Was it the first year of residency that got you? You were like, I can't do these hours. This hospital is working me to the bone.
Uh, yeah, it was a kind of mix of everything. I think it's like you see other people kind of walking a path, and I think it's I don't know who that quote is attributed to, but like I don't know, stupidity or whatever, or pure like being an idiot means trying to do the same thing and expecting different results. And so for me, it was just looking at all these other doctors that had, I don't know, 50, 60 hour work weeks, terrible relationships, no fun with their family. Yeah, and I was like, hey, I had not expected that. And if I'm gonna work here really long hours, then maybe in 10 years I'm not gonna make much more money. I'm still gonna be grinding and not gonna see my family. And I was like, yeah, that's not what I'm gonna do. So that kind of made me take the exit and leave medicine.
Understood. So, Julian, tell us about more. Well, tell us more about your time in the industry, right? What's your experience been like working here for such a long time? Share with us the good, the bad, and the ugly, if any.
Yeah, so I came, so maybe to set the scene, I came in during a time Mount Gox had just collapsed. Bitcoin was just on its way down. I think the first time I kind of looked at the price at that point was about $1,000, and it had kind of really dropped to $800. Um, Ethereum was not a thing yet at all. Actually, at that point, I was like the story there was just there's all these Bitcoin forks, and they're not going to work, and anything aside of Bitcoin is going to be a scam. And so at that point, I was um, I don't want to say like a maxi for Bitcoin, but at that point for me, that was really just only Bitcoin, and I think for most people at that point, other than if you just wanted to gamble, and then Bitcoin really kind of dropped down. I think it bottomed out at 200. I started investing. I think I had an average price of around $500 at the end. And yeah, not much happened in 2015. That was a yeah, very kind of sideways year. And then in 2016, this is when stuff started to get spicy. I mean, obviously we had the DAO hack, and then we had a fork in Ethereum, so that was a lot of stuff going on. And then obviously 2017, that was that massive run up. I was really fortunate during that time that I had done some really lucky trading where I had bought some bitcoins very early on, and then went into a lot of altcoins at that point. I had a really lucky exit point in at the end of 2017, and it was not so much because I had forecasted or predicted that the market was going to go down. It was really more that I was just I had so much money suddenly in crypto, and it was such a sizable kind of bag that I said, if I can get out and I have that kind of money on the side, no matter what's going to happen in the future, myself, my family, everyone is going to be taken care of. And so I had this really lucky kind of exit end of 2017. Um, and yeah, and then 2019, I started accumulating again. Also because we had started Cake, and so there was just so much focus again on that. And um, yeah, so I think if I compare 2022 to 2018, and I think a lot of people kind of draw comparisons. For me in 2018, I mean, I don't know, I really felt that was kind of it. Like I was still like hoping that the industry was going to recover, but back then it was just all about the ICOs. Ethereum hadn't found its stride yet. So there was a lot of questions on, is Ethereum actually going to survive? I think it went down 95% or something. DeFi wasn't really a thing in 2018. It saw its early kind of stages. NFTs, end of 2017 was just kind of the start. So I think those two killer apps on Ethereum that really drove the kind of 2020, 2021 kind of hype, I think most people just forget that that wasn't there yet. And so if I compare that today with back then I think there was just a lot of skepticism in, well, how is this going to recover? And today, I think the biggest skepticism just comes from some fraudulent actors in the space who have like really kind of misled the public. And from that point, it's just very different. That there's nothing wrong with crypto. That Bitcoin is working, Ethereum is working. A lot of the projects are super solid. It's just a lot of trust kind of got pulled out, and I think that's massively different to 4 years ago.
Julian, so much to unpack there. I think first and foremost, well, at least for me personally, I think a lot of people can agree. I like that you are transparent with saying, "Hey, I got lucky. I didn't. I'm not like some magic wizard. I wasn't didn't predict the top. I saw a sizable amount of money, and I said to myself, I can be comfortable with this for the rest of my life. So can my family." And I exited. A lot of people get lucky, and they try to like market that as them being expert traders or them being some sort of like top wizards, and you're just like, hey guys, it happened the way it did, and I'm happy with it. So a lot to unpack again. I wanted to talk a bit about your YouTube channel and your crypto show, but since you touched on Cake, let's skip over some questions. Give us an overview of what Cake DeFi is. I don't want to go too deep into it, but let's just talk about that really quick. What made you start it, and what are your goals? What are your high level goals with that ecosystem?
Yeah, so I mean, 2 years ago, a year ago, I would have always said Cake is the Asian version of BlockFi. So if you're in the US, BlockFi, and in Asia, Cake, and so it's kind of the Asian version of that. So this platform you go to and you go for yield. For us, the major difference to how Celsius was set up, or how BlockFi was set up, or Voyager, or all these companies that kind of went bankrupt, other than FTX in 2022. The big difference was just that we didn't build a black box and told customers, hey, trust us. Like we're going to do everything right. For us, it was all about, we had DeFi services. That's why Cake DeFi. We had DeFi services in the back end, completely transparent. People could track and trace everything. And on the front end, it's a regulated front end. So I always call this the CDeFi model, centralized, decentralized finance. Um, we started that in 2019 with exactly that kind of in mind. And so the natural questions that people always ask is, so why would I use you? Why wouldn't I go natively to the DeFi services? And my answer is, yeah, you can. I mean, you wouldn't be our customer if that's what you're doing, right? If you are totally comfortable storing your private key, if you're totally comfortable picking and choosing and you're okay with different wallets, then you very unlikely you're going to be our customer. Our customer, you're also not going to be our customer if you're buying your Bitcoin and Coinbase and then you're like, hey, you know what? I'm just gonna pick Bitcoin. I don't want any yield. I don't want to move it anywhere else. You wouldn't be our customer either. You would be our customer if you're like, hey, wow, this DeFi stuff is really, really cool. I don't know how to get involved in it myself. I don't necessarily want to control the private key myself. Or maybe you just want to diversify where you're like, hey, some part of my assets, I want to control the private key, and then some other parts I don't. And but I still want to get access to that. And so you come to us, you get customer support. You have full transparency, and and our commission is we take a cut on your returns. So we're completely transparent. The fee structure depends a bit on the product. Some products are just, they have a bit better margin, then we charge a little bit more, and then some other products just have very low margin. So our fees go from, I don't know, 5% to 20%. We're completely transparent. You can track and trace all that. And so that's the model. Again, like 1.3 million customers. Our main target audience is mostly Asia, Europe. North America I mean, we've seen some North American users now, especially that I think BlockFi and so on just had so many issues. But we didn't want to kind of compete with BlockFi. We felt we couldn't compete in the US. And so that's why we never kind of approached the American market. So we always stayed away from that. So that's kind of the model.
Julian, on the topic of your innovations, I know that you have also worked on DeFi chain. You want to give us the same kind of overview with respect to that?
Yeah, so that was about a year later in 2020. We were really at that point. I mean, 2019, we didn't really know if DeFi was going to take off, but then it became super clear that DeFi is just going to take off on the Ethereum space. And so for us, it was all about, hey, maybe we can bring DeFi to Bitcoin. Obviously, it's not possible to do it directly on the Bitcoin blockchain. So we forked the Bitcoin blockchain, made us not directly a side chain out of it, but a chain that piggybacks on top of Bitcoin. It's a proof of stake chain. It has additional opcodes. So it's non-Turing complete. It follows the same principles. It's a limited supply. There was no ICO. It was purely airdrop to Bitcoin holders. And the first block was basically mined on Bitcoin halving day in I think that was May, if I'm not totally mistaken. So May 2020. And the idea there was, let's expand the opcodes. It anchors on Bitcoin, so every once in a while there's a Merkle root that gets mined in the Bitcoin blockchain. And it's really focused around bringing DeFi to Bitcoin as natively as possible. So you can liquidity mine on there. There's a DEX on there, so you can liquidity mine on there. You can create vaults. There's a native stable coin. You can create what's called D tokens. So there's like D Tesla and D Apple. So you can mint all those out of vaults. So you have kind of the maker system in this entire ecosystem. Um, you have you even have futures on there. So there's like an entire kind of decentralized finance ecosystem on there. The blockchain is now humongous in community. There's I think close to 100,000 active addresses. I think there's like 10,000 masternodes now, and and obviously we as a company at Cake, we obviously want to support that ecosystem. So we've always tried to help and support and get that ecosystem going. But I want to also mention one thing. We had actually done this completely public. We burned any kind of coins that we would have gotten at the beginning with an advantage in with the airdrop in knowing that we could get a lot of these coins. So we had publicly burned those verifiably at an address. So we wanted to have this super fair launch. And I mean, at that point in 2020, no one knew if that chain was going to take off. And then once we saw it taking off, we felt like if we keep those coins, sure, we're going to have a financial incentive from there. But at the end, it's going to harm the entire ecosystem. So I think that was in 2021. We had burned all those coins. And yeah, so now I mean, obviously we make our money on cake from the rewards that people are making, and we get our cut on that. But other than that, for us, it's really about fostering that ecosystem. We are expanding that now, though. I think if I look back on that, I think on the cake side, we've done a lot of things really, really well. On the blockchain side, I think as a community, we should have noticed earlier that maybe the DeFi for Bitcoin is going to be a bit slower than expected. I had really expected that Bitcoin maxis were going to be way more open to that. And I think it was a bit surprising that they weren't. I felt that we should have probably build a layer 2 on top of the DeFi chain that is EVM compatible. So Ethereum virtual machine. And I think, I mean, and that layer is getting ready right now. So this just got announced this week. And that's going to allow us to completely build into the EVM side as a community. And I think if we had done that a year earlier, I think that would have been way better. But I mean, that's just how it is. So, I mean, yeah, I think from a community, I think we should have done that probably a year earlier. But I mean, that's how it is.
Julian, I think it'd be fun to have you on for a space where we do a deep dive into DeFi chain, or maybe even Cake DeFi, maybe do a dual ecosystem AMA. Follow up with you on that
Oh
next
yeah,
week.
I
But
mean, very happy to. Yeah.
fantastic, fantastic. Yeah, I mean, it's very interesting for me. But this was, this broadcast is to focus on the broader Dr. Julian Hosp. So I want to kind of back up. You're a bit of a renaissance man in real life and in the crypto space. You have also started your own YouTube channel. What made you decide to become a content creator, and what kind of content can viewers expect to find on their channel or on your channel? Excuse me.
Yeah, so in 2014, when I got into blockchain, I mean, it was completely new. I was a medical doctor, I had no background in all that. And so for me, I just approached that as how I would approach medicine. So I kind of analyzed what did I have to learn, what were the subjects that were relevant to me. And so a lot of it obviously had to do with engineering, had to do with being able to code. So I learned C++. It was all about cryptography. So I learned cryptography. It was about the game theory of things. So I tried to kind of really understand the tokenomics in Bitcoin at that point. And so how did all these things work? And I just realized like and at that point, right? I mean, especially in German. So I in Austria, you speak German. Especially in German, there was very little content. Most of it came from Andreas Antonopoulos, and that was in English. And there was very little translation. And so I thought, if I'm going to do this right, why don't I become a really great student by becoming a teacher? And so I started this YouTube channel. I think it started it in, I think, May 2015. And I really started it with, I think the very first video was how skeptical I was of Bitcoin and how bullish I was of the entire technology, how excited I was about cryptography and about the games theory behind it. And it's just because it was so early and I didn't fully understand that concept of digital gold yet. And so that was kind of the very beginning. And then those videos kind of evolved into, well, how does Bitcoin actually work? What problems does it solve? So then the economic parts came, and I started to realize, okay, what's inflation? How does deflation work? So all topics that I think today are very common sense, and I just really started explaining those topics in German at that point. And all the videos were in German. People started. I mean, it was at the beginning it was like maybe 100 followers, and then 1,000, and then a bit more and more and more, and then it became 10,000. And in 2016, 2017, I started analyzing a lot of ICOs. So it was a lot about altcoins and ICOs that you could invest in. I mean, I think I did a really good job there where I just tried to stay very factual, very neutral. I mean, that's the kind of person I am. I still am a medical doctor by heart. So for me, it's all about the data and the facts and trying to stay as cautious as possible. And today I sometimes get criticized for that because people I think sometimes want to have a bit more hypey or rah rah rah. And yeah, and I'm just very cautious. I'm someone who says, look, I do believe Bitcoin is going to go to 500,000 or a million, but along the way, it's going to have massive dips, and I'm just not sure you're going to survive the dips if you're going to go all in there. So like have a bit of a diversified portfolio. Don't put all your eggs in a basket. And so I've always had this kind of approach there, and people just really started to like follow and love that. And so today I'm by far the largest German influencer when it comes to crypto. I've over 200,000 followers there. I even though I run a company with 160 employees, I still do my videos on there. I also now started doing them in English. My English channel is way small. I think I have about 10,000 followers in total. in English. But yeah, I haven't had that much focus on, but I want to definitely grow that and bring that kind of aspect to it as well.
And I think a lot of people appreciate that, Julian, a more fact-based influencer point of departure rather than just hyping all the time. I think that's probably why you have sustained your channel and your platform for so long, and have such a great reputation in the industry. For influencers, well, you kind of elaborated on what sets you apart from other influencers, but for those that are just trying to grow their audience, that are just getting started out as either influencers or YouTube personalities, what is your advice? What is the best advice you can give them, or what advice would you give your younger self in terms of growing the channel, growing the audience?
Yeah, I mean, it's a super fundamental advice, right? It's the same advice I would give my 2-year-old son, and actually tell him this all the time. And he's 2 years old, and it's be useful. So it's really about being useful. And what does this mean? And being useful, obviously, for my 2-year-old son who has no interest in making videos, but being useful there is okay. Taking a cup, bringing it from the dinner table, and bringing it into the kitchen. That's being useful. And for you as a content creator, it can be something very specific. Now, the key thing is if you're trying to be useful to a lot of people, then maybe those people don't recognize that you're trying to be useful because you're way too broad. So at the very beginning, I would really recommend pick one project, one coin, a very niche topic, and really go with that and be useful around that and really build your audience around that. And I think today you look at some of the larger creators, I mean, they all started very, very niche, very, very small, and then step by step became more and more useful. Obviously, I think what's also important is you want to have your own style a bit in there. If you're very if you're someone who's just very generic, I think it's very difficult. But you want to have a character. You want to be remembered for some things. It's absolutely okay to have some rough edges, and I think some people don't want to have that. They try to hide that, but I think that's always a super. I think that's a superpower. So um, yeah, that would be my advice. And I just see that when I see other people who are starting a channel right now, they many times they try to copy, they listen to someone, and then they just kind of regurgitate that. And you want to have your own style a bit, and I think that's really the trick to it all. Ask yourself, is what you're doing, is that really useful to people? And why is it useful? And how is it useful? And I mean, I don't know. I mean, one story that I would always love to add is the reason at the end we came up with the name Cake was because for us, it was all about having a good product, having a transparent product, easy to use product. But if all those things, if you can still put a smile on people's faces, they truly going to love your product. And that's at the end why we picked the name Cake. And so the lesson here is if whatever you're doing, if you're doing a really good job, you're really good at explaining, but at the end, people walk away with a smile on their face, you're totally winning. So that is, I think, always that doesn't mean you need to be a comedian, but it just means that don't take stuff too serious. I don't know. For example, I mean, I do a lot of videos in the car here in Singapore, and I talk about stuff in the crypto space, and then I just make this random comment on driving, or like the other day I was like in the parking garage and I had to park, and I was like, like I was in this very deep discussion on monetary policy. And then I had to like backwards park, right? And so I was backwards parking. And while I was backwards parking and talking, I was like, wow, I can actually talk and backwards park at the same time. And people just find this super hilarious. And you can see this. You can see people in the chat completely losing it. It's just these super small comments, but they're very natural. But I think that's what makes that. I mean, at the end, that's who I am, and that's what like. It's not that I force that, right? It's just more on I let this naturally happen. And I think some others they try to hide that part where I don't think you should be forcing it, but I just think you should just let it happen naturally.
So, Julian, you also have a podcast. It's called The Crypto Show. When did you start that? What was the inspiration behind it? And what sort of content can listeners expect to hear?
Yeah, so that's the really interesting part. So my German YouTube channel is humongous in the entire kind of crypto space in German. The podcast in Germany is okay. I mean, it's never as big as YouTube. In English, it's exactly the other way around. So my English podcast is actually almost outperforming my German podcast, despite me not having a large audience on YouTube. So it's really, really interesting to see that kind of flip side to all of that. I don't really know why that is. I mean, probably because just the English audience is way larger than the German audience. So I think that's where it's all coming from. Um, but it's probably also because a lot of people in the English kind of world, they just sometimes love to listen to podcasts rather than watching a YouTube video. And so what I just try to do is when I have good topics that you don't need to have a visual to, but all you need is really the audio and it's just more discussions. I try to get 2 to 3 shows out a week. Generally, they are around 10 to 15 minutes. For me, that's kind of the sweet spot. Sometimes I make market comments. Sometimes I just give a general update. Today I talked about my kind of impressions on the SBF kind of interview, and I just kind of gave my 7 kind of feedback sessions on that. So yeah, it's all over when it comes to crypto, and yeah, it's quite interesting how the crypto the audio in English is way more popular than the video side of things.
So I'm going to throw an impromptu question at you if you don't mind. But what were your impressions at a high level of the SBF interview?
Yeah, I mean, I thought it was super shocking just to see how SBF was kind of acting on there, and to me, and not only him, but I was also shocked a bit how at the audience how um, I don't know, I felt the audience applauding, clapping, support, almost being supportive. I felt that was a bit weird. I kind of at the I really post like a couple of questions in there as well where I don't really have the good answers to, which is, I mean, I honestly believe it's a total waste of time to watch that. It's you get zero content out of it. So the only thing you can watch it for is actually getting quite angry in how can someone be such a politician about the answers, right? You get a straightforward yes or no answer, and I mean, at the end, he talks for 5 minutes. There's not a single answer given. It was just like talked around. I think Andrew Sorkin, could he have done a better job? Sure, but I also don't think that he was the problem. Some people kind of criticized him that he threw him softballs as an interviewer. I disagreed with that. I don't think, I mean, I really don't think anyone could throw him such a hard ball that he would actually give an honest answer. He's just going to wiggle around. At the end, I think he's doing that either because he's so sure that he's not going to go to prison and he's not going to be like I don't know, he didn't do anything wrong, and that he's gonna be right in front of the law. Either he does that, and so he just doesn't care, or and that's actually what I rather think. I think he knows that he's really deep down, and he just does basically what he did before, where I mean, and he admitted that, right, where he was just manipulating everyone's opinion, and he did this in a, in my opinion, very, 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 very good way. So I'm not saying that I applaud it. I'm just saying it was very efficient, and yeah, I mean, many people kind of called him the hero and saw in him the savior for everything, and at the end he was like playing all sides. He was just super like yeah, I think questionable, and I think he's doing that again right now. I really do, and you see it working. You see it. It's crazy. It's crazy how many people on Twitter. Um, Bill Ackman came out, right? Kevin O'Leary came out and said, "Hey, I believe the kid," right? And to me, that's shocking. It's shocking how like people who are actually really good decision makers look at the facts that where what that happened, and yeah, it's just shocking to me, and I think that's what he's doing. And I finished the video with the frustration, how I think most of us are just frustrated to kind of see that, and deep down, we're kind of like, how is how is he not even in jail? I mean, I'm not talking that he, like okay, he's not for sure he hasn't had his trial. I mean, that's fine, but how is he not in jail? How is there no kind of deeper kind of research being done? And I think deep down we all sit there and we're like worried that someone like him is not going to get any punishment, right? And I think that's what deep down we're all kind of worried about, and we all sit there and be like, that's where I think a lot of the frustration is from. And um, yeah, so that was kind of that 12 to 15 minute video today where I said, hey, I watch it, don't watch it for the content. I think the content is really useless. There's no new information. It's really more those things around it. I don't know. Did you watch it? Would be interesting to hear your thoughts on it.
So I haven't watched it yet. It was on yesterday as I was in transit, and I'm gonna watch it at some point. I think a lot of us
Mm,
share your frustration, and I think that so my colleague and I we're so I think that he's somehow gonna find a way to not go to prison, and my colleague
mm,
who's an attorney is like he's definitely going to prison.
mm,
These things take time, but we both agree that the entire thing from beginning to end is extremely bizarre,
mhm,
and we're scratching our heads like, are we in a simulation? Like, is this
mm,
real life? What's going on? Right? It doesn't make any sense. Anyone else would why is he getting such I hate to use this word, but privileged treatment? But
mm,
again, not to take the space on a tangent. I just wanted to hear your thoughts on it because you
mm,
said you had covered it as part of your show. We will see how this unravels. My advice to most people is if you want to like peep your head in and out and kind of see what's happening, go ahead and do it. But I mean, this is not a watching the SBF drama and like being involved in every nuance of the case, unless you're putting out content on it, is not a conducive use of your time. It's not going to make you any wealthier. I would focus on the industry, learning more about what's going to be the next big thing, and trying to just build yourself up and build your you know build your portfolio up. Right. This is a big distraction in my opinion.
Man,
But
I really agree. I couldn't agree more. Like you're so right. I actually that was the first time now again that I listened to anything or read anything about SBF. And I know, like, I mean, obviously podcasts, YouTubers, and so on, the news has been kind of debating him up and down. And I didn't follow anything. Like, really, it was just for me at the beginning. And then I was like, ah, this is just gonna be a trash talk shit show. But to me, yeah, I mean, for me, obviously, it was very early in the morning here in Singapore, a 12-hour time difference to New York. So for me, it was very early morning. For you guys, it was your evening yesterday. And so I just kind of had my breakfast. Afterwards, was getting ready. I had like an event this morning. So I was like getting ready. So I was like, okay, let's put this on. And kind of, I couldn't believe it, right? And so then afterwards, driving to the event in the car, I just kind of let my kind of comments free flow. So that's where it's coming from. But I agree with you. Yeah, you're not going to become a better decision maker listening to this. It's actually just gonna frustrate the living crap out of you.
Yes, certainly agree. And I mean, if you listen, if someone in the audience says if you are where you want to be in life and you're content, it's great. It makes great content. It's really enjoyable. It's why people are so into it. It's very exciting. It's like watching a Netflix documentary, but in real life. I personally have a lot more room to go to where I want to be, so it's
Mm,
something where I pop my head in and out. And so I'd advise anyone else who is feeling the same way about their journey as I do to just focus on the tasks at hand and how to get to where you want to go. But we will see how it unravels. Julian, I wanted to move on and one more thing. As an innovator, you also have 3 books, right? You have one called 25 Stories I Would Tell My Younger Self, Blockchain 2.0 Simply Explained, and Cryptocurrency Simply Explained. At a high level, can you just give us some insight into each one of those and tell us where we can buy those books?
sure. Thanks for asking. I you can buy all 3 books in Amazon, or I think Barnes and Noble, or I think most places, but definitely in Amazon. You can also get them as an audio. My very first book was more on. So I was that was just when I had quit working as a medical doctor. I had moved to Asia, and for 2 years, so that was 2012, 2013, and then the first half of 2014, I just really tried to get something off the ground, and I just tried to do something in the business world, and I just couldn't. I was just not good enough of an entrepreneur. I didn't have the experience, didn't know how to raise funds, didn't know how to kind of find the right partners. So for me, it's just really, really difficult. I had been relatively successful up to that point. I mean, I'd been one of the best best kite surfers in the world. I was a medical doctor. I had quite some, like, I had some massive achievements at that point. But for me personally, I wasn't there where I really wanted to go to. And um, yeah, I had a good friend of mine who was actually a medical doctor, and she just said, and I was almost depressed. I was really frustrated because I was like, should I go back to medicine? And I didn't know what to do. And she just said, you know what? Why don't you kind of almost like a diary, right? Kind of keep a bit of like a status quo where you're right now. And so I just thought, yeah, maybe I don't know, just put down a couple of stories that happened in my life. I want to have like inspiring stories, and then So I wrote down like professional sports and like a lot of pain and the training and the discipline and I don't know, studying medicine at the same time and kind of the learnings there, and then like some crazy stories. I had this really crazy ex-girlfriend that is I actually don't know if she's in prison now, but who was looked for by the FBI because she did like a lot of fraud and no one knew until like at the very end of that relationship. And I talk about like uber crazy parties in Brazil, kite surfing, and doing all the craziest stuff there. And so it's just kind of this summary. And at the end, initially I didn't have a plan on writing a book, but at the end it became these really um, like great stories. And so I was like, okay, some stories are super hilarious. Some stories are super inspiring, and some are just crazy. And so I said, yeah, just put a book together. And I mean, I don't care if no one reads this. I'd kind of written it already, and so I made a book out of it, and published it. And yeah, people just really kind of got super interested with the stories. It's just yeah, all like, again, the stories are all over, right? They go from being uber crazy to uber hilarious, and yeah, and obviously the bigger my audience became on social media, the more people read that book. And I think today it's I don't know, I think we've crossed now close to 1 million copies of that book. And so that was that very first book, 25 Stories I Tell My Younger Self. The crypto book was uh, purely actually a summary of all my crypto lessons that I had kind of gotten myself. It goes into the super easy kind of way on how does the cryptography work in most cryptocurrencies, mining, staking. So really, I have super easy insight as a basic kind of overview. It's not as like shallow as The Internet of Money from Andreas Antonopoulos, which is, I think, a really, really amazing book to kind of get into. But I think it really focuses on that, right? It really focuses on the Internet of Money. It doesn't go deeper. But then, like mastering Bitcoin, it's just so like it's so techy. And if you go more for the Bitcoin standard, then you have like this really strong focus on Bitcoin. And so I mean, my book came out way before the Bitcoin standard. But so I didn't want to be as like non-technical as the Internet of Money, but I didn't want to go so deep as mastering Bitcoin. And so that book, Cryptocurrency Simply Explains, actually my most famous book. And it became that there was a humongous boost to it. Because at South by Southwest, I think that was in 2017. I think 2017, Elon Musk was seen with that book on stage. And so there's a lot of pictures shared. And so I don't know, I think just that part sold like 100,000 books. It was crazy. It's just the power of that, like a picture of Elon Musk is just insane. So yeah, that's where that came from. And then Blockchain 2.0, More Than Bitcoin, that for me was that was written during the last winter in 2018 when everyone just thought, okay, that's it. Like cryptocurrencies will never recover. And so I just go in there and say, hey, look, cryptocurrencies will like recover, more blockchain use cases will come. And so I just talk about all those things. I mean, at that point, actually, I talk about DeFi, I talk about NFTs, I talk about a lot of things that like really happened over the last 4 years. And at that point, it was just such a winter that most people just, yeah, didn't see the potential as much.
Julian, how long were you kite surfing for? And also you said you were a professional kite surfer. Were
Mm.
you how were you making money doing this?
Yeah, so I think that was I think one of the biggest lesson, and I still kind of I preach that lesson in my company almost every day. I think it's a big lesson for anyone. I'm going to share that. Kite surfing, I kite surfed for professionally for 8 years. In total, it was about 10 years from like starting all the way until like really I kind of stopped seeing this as my main kind of hobby or my main thing. Um, for those that don't know, kite surfing is a sport where you have like a wakeboard kind of thing, and then you have a kite in the air, so you don't need any waves or something. You just need wind. But the ideal conditions would be if you have like super flat water, no ripple on the water because it's like almost going through butter, or you have really really nice waves with wind. So these are like the perfect conditions. And I was one of the best in the world. um, I I competed in a discipline called freestyle. So it's a lot about jumping, doing tricks, rotations, and so the key thing, right? And so here's the lesson, and I think that's such an important lesson. Um, in whatever you do, you don't get paid for what you're doing. So you don't get paid to kite surf. You don't get paid to write code. You don't get paid to make videos. You don't get paid to, I don't know, perform. You don't. What you get paid for is the utility that that activity provides to other people. And so it is such a fundamental understanding. If you write code and no one uses whatever that line of code resembles, you're not going to be paid for that. It's a hobby. The difference between a hobby of a video is you making videos. It becomes a business when other people not only want to watch your videos, but they actually pay you to watch those videos, or they watch them on YouTube and they're okay with watching ads in order to get to your videos. And so YouTube pays you for that. And so the mind change, and I just want to be very like that lesson to me at that point, right, made me from making about 50,000 a year. So that was how much I was making when I was top 10 in the world. I was making about $50,000 a year. That's how much I was able to keep in my pocket. So companies that would pay me, I had sponsors to pay me, price money, minus all the travel costs and so on. So I could keep around 50,000. Um, that understanding made me from making 50,000 a year to making 50,000 a month. Why? Very simple. I thought me being a top 10 kite surfer is what's going to make me the most money. And then I had a mentor of mine just said, look, Julian, no one cares that you're a top 10 kite surfer. So because no one cares, you're not going to make a lot of money. Yeah, companies are going to pay you for it, but they're just going to pay you so much as useful you are to them. So I was a bit frustrated because for me that like it's just the same. Like today when I go to someone in the company, I say, look, I know you're a really good coder, or yeah, I know you're really good at making videos. You're a really good author. You're really good at writing blogs, but I'm not paying you for that. Like that's not what you're getting paid for, and that confuses people. I say you're getting paid for those lines of code being useful to our customers. So if you don't have this in mind, how you're writing that code, that afterwards our customers have an advantage, that our customers are going to spend more money, or they're going to use us more, or people are not just going to read this, but they're actually going to read it and they get more trust. They want to use our product more. In kite surfing, the big change that I made, I went to my sponsor and I said, hey, look, I want you to pay me less, but in return, I want to get a cut on all the kites and all the boards that I'm selling when I do kite camps. So I changed the business completely for me. Instead of competing and doing video shoots and so on, like all these crazy things, I still competed and I still did video shoots, but I also did, for example, kite surfing camps, and I did classes and lessons. And there, instead of having to write the board or the kite that was the best for me, I actually switched to writing a board and a kite that was the best for the customer, because it was not about me being the best with that board. It was being useful to the customer, and that customer was not able to write that board or that kite because it was made for a professional. And that changed everything fundamentally, right? It changed it so much because now suddenly people were buying kites and they were buying boards because they were like, hey, if Julian, who has just competed at this competition in Venezuela, and now we're on this amazing yacht out in the Caribbean, and we're just riding these kites, and he actually writes the kite and he writes the board that I could also write. And I see him doing these 20-meter high jumps, and I'm seeing him doing these massive rotations. Hey, if he can do it, I can do it. And that's actually the board that I see in the magazines that he's being taken pictures with in the magazines, and the magazine says it's the best board for a beginner. So I'm gonna take that. I mean, if he can write this way, then and it's the best beginner board, I'm gonna get this because that means I can also learn these things. And so that's such a fundamental thing for people to understand, because most people just always think, hey, I don't know, I'm top 10 in something, I'm the best at something. So what? Really? So what? What matters is how is that useful to other people? And how is it so useful to other people that other people are actually going to pay you or pay somehow for that? And it's such a different thinking. And that, I mean, I learned that that's I mean, now for me, almost 15 years ago when I learned that, and that stuck with me ever since. And it's one of the most important principles in life.
God, Julian, that's such a powerful message, and it it reminds me of a friend of mine who is a professional Muay Thai fighter, and for 10 years he was in the ring kicking ass. After that period, he was like, "Oh, I wasted my life. I don't, people don't want to pay me that much. I haven't made that much money." And I'm like, "Dude, you have this incredible talent. You live in a upper middle class community. Start a dojo, right? People want now more than ever to hand their kids over to someone that they can trust, someone they know that can fight, and someone that they know will take good care of their kids in their dojo. And now, he's set up his own dojo. He has a martial arts academy, and he's taken this skill that he well, really the market was saying, hey, we're not going to pay you much, and even when you're done, you have to go figure out what you're going to do, because we don't want a 30-year-old guy fighting in these rings anymore. You're going to get knocked out. And took this talent that he had, and he found a way to monetize it, and like you said, provide utility not just to his own kids, but to the kids around him in his community. So I think it's such a powerful message, and it's a powerful lesson that you just shared with us.
Yeah, I mean, again, I think it's such a, yeah, you're right. I mean, I love that story, how you kind of added that. It's really, yeah, it's about, and the difficult part. So the really difficult part about being useful, right? And that's what frustrates people, is that it's not you who gets to decide. It's not your choice. It's everyone else's. And that's frustrating. And I understand that that's frustrating, because many times this means, if you love doing something, for example, for me, right? I love to kite surf. And I just thought, man, like, why is this not useful that I'm one of the best in the world? And I mean, the truth effing hurts, right? But it's exactly what you need to hear. And I gladly had this mentor who just said, yeah, Julian, like, you're top 10 in the world. Like, that's amazing. But who cares? Who the F cares? And so to me, I was like, well, like, I care. And he was like, yeah, that's great. And that's why it's a hobby. It becomes a business because what you're doing is so useful that suddenly so many other people start caring. And I don't know, yeah, big lesson. Is going to stay with me all the time. Honestly, I mean, my wife and I always have a bit of debate: at what age can I teach this to my kids? And like I said, my son is now a bit over 2. He understands. Now to him, I don't call it useful. I call it helpful. So he has to be helpful around the house, and he has to be helpful everywhere. Just because I want to, like, it's key. And I don't know. We have a bit debates on at what age should kids kind of really learn that. She's just always worried, which I understand as well, where she says she never wants my kids to kind of grow up feeling that if they're not helpful, that they're not worth anything, that we love them unconditionally, and we do. But yeah, that's not how the world works. So yeah, that balance is really key.
Such a powerful lesson, and if the audience was to take one thing away from this space, I would recommend this story, and the lesson behind it is what you want to walk away with. Julian, I want to bring. I mean, I would love to talk more about philosophy and kind of what people need to do to better themselves in life. And again, we can always come back for another space, but I want to bring it back to the crypto market and the overall global economy. Where do you think we're headed? Right? Where do you think the global economy is headed? What does that mean for the crypto market? And are you bullish or bearish in the next year, and then maybe in the next 3 years? Give us the rundown.
Yeah, so I just want to kind of start with one thing. I'm definitely not a macro economist or a specialist in that field. I'm again, I don't think I'm stupid, but I'm a very simple thinker, and for me, stuff has to make sense. And so last year, when the Fed came out and said we're going to raise interest rates, again, I'm not the smartest person in the room, but for me, I mean, that just kind of signaled a bad year ahead. And I actually went on YouTube live. I sold $10 million worth of Bitcoin live on YouTube during a time when Bitcoin was what, $62,000, $63,000. You cannot imagine the names I got called at that point. And I had mentioned that this is just going to be part of my holdings. I'm going to sell a bit more later on, but I just don't want to sell so much on this YouTube video. And so that video is still up. It's in German. It's I think I filmed it in end of October last year. And to me, why did I do that, right? I didn't do it because I thought the price is going to go down. If I had thought the price was going to go down, I would have sold all my crypto and I would have shorted it. But I didn't think that. Not at all. I just thought, my goodness, we had this crazy ride fueled with like super cheap money. And it was so easy to make a lot of money. And I had, again, not only life-changing money, I had made that in 2017, but now I had like generational wealth. And I was like, okay, I don't want to take this extra risk. Again, like, a lot of luck involved, but obviously just I think one thing that I have as a medical doctor that a lot of people don't have, I have this super strong emotional control. Like you need to have this emotional control. I was in the ER, trauma surgeon. You have people come in and they are, I mean, they're super close to dying. And if in the next 5 minutes you don't have good decision making and you can't keep your stuff together, that person is dead. And I only worked in a hospital for 1.5 years, but I mean, that kind of gets ingrained to you. So it just becomes common practice. It's the same as, I don't know, fighter pilots or people in the army when they're in these extreme situations. It just kind of, you just kind of get prepared for that. And I still have that. I rarely get emotional in decision making. I have this very calm kind of demeanor. I can get emotional about excitement, but in these times, it's more on just doubling down on an existing decision. It's not that I go and say, oh my goodness, now I'm scared and now I need to make a new decision. This is absolutely not me. And so that's how to me it all started last year. And I think we're now at a time where we're probably at the end of that. I mean, just yesterday, the Fed, at least my time yesterday, I think, yeah, also for you, it was yesterday. The Fed signaled that they're probably going to slow down a bit with that aggressiveness. And to me now, and now it actually comes the part where I would probably say I have even more expertise than it is, because now we're actually talking about how are these units working that actually drive the entire economy, and these are businesses. And so, I mean, I run a company myself, I run a business myself, our business is cash flow positive, we're making money, we don't have outside investors. And so now I can actually look at how are these units functioning, and the entire economy consists out of businesses. Businesses pay everything. Doesn't matter if you're self-employed, if your business is a one-man show or a one-woman show, or if there's hundreds of thousands of people in this business. Business pay the taxes, taxes pay the government employees, businesses pay the employees. It doesn't matter. And so now the question really comes, how are these units doing? And from everything that I'm seeing, even though the Fed is maybe slowing the rate hikes, maybe they're even lowering interest rates, looking at all these businesses, I'm just not sure these businesses are doing super well right now. I don't know, but I mean, it just looks to me like that. I talk to my friends and I say, hey, how's your Christmas plans? Like, and again, I mean, this is anecdotal, and anecdotal kind of things are not always the best evidence, but I mean, it's still evidence. Talk to your friends. Think about yourself. Like, are people spending more money this year for Christmas? How was Black Friday? Yeah, sales on Black Friday were slightly up, but inflation is up even more, so people actually spend less. And I think businesses, same thing. I mean, all the CEOs. I posted it on social media so people know. I was at the LinkedIn meeting today here in Singapore. A lot of business owners, a lot of CEOs, right? And we talk, and people are like, yeah, like this company's laying off, this company's saving. And then I talk to friends. Hey, how's Christmas? Like, are you traveling? Are you going to spend more money this year than last year? What's your plans? I know. Talk to your friends. Talk to your family. Think about yourself. Are you a bit more aggressive this year? Are you going to take it a bit slower? So the thing just that I see is that while the Fed is actually making it way more bullish, I am a bit more cautious right now, especially for the first quarter. That I while I don't expect right now, I mean, I would be really surprised unless there's another crypto implosion, but I would be super surprised if we're seeing like a massive leg down from here. I mean, the leg down would come if there's more selling pressure than buying pressure, and I just don't see where this would be coming from. But then I also don't see right now that now we're seeing a massive pump. I actually think that if we're seeing a massive pump, these are probably fake outs, and I would be very cautious in buying into those pumps. Um, I think times right now, and I've said this many, many times, are probably fantastic for dollar cost averaging into the market. I do think looking back in 2 3 years, we're gonna call these prices the bottom. Like let me give you a quick story about the bottom. When in 2015 I bought Bitcoin at $500, people always later on said, "Oh, this was the bottom." Like, man, like how did you catch the bottom? And I'm like, dude, this was not the bottom. The bottom was $220. Now I know today Bitcoin price is at 16,000, 17,000. No one cares. But at that point, there was a difference of 100%, or whatever way you look at, or 50% down or 100% up. And so today it's exactly the same thing. So just imagine if you kind of keep this as a reference, it's like the Bitcoin, that the actual bottom being at 8,000 or 8,500, and you buying Bitcoin at 16,000. Now it sounds crazy right now, but if you look at this in years, it's probably going to be the exact Same thing, where you're gonna have people who say, "Oh wow, you bought Bitcoin at 17,000. Wow, you bought Ethereum at where are we, 1,300? Oh wow, you bought DeFi chain at 50 cents. Man, it's like that's a steal." Yeah, like in a couple of years, I know, but you just kind of need to understand that we're gonna see a long-term bottom right now, and of that, I'm super convinced. I'm just, I'm just cautioning that when you start buying right now, and dollar cost averaging right now, I think is a really, really, really interesting approach. Just be like, keep in mind that we may not see a leg up right now, even though the Fed is easing up, because we do have a bit of an economic pressure, and this may take another 3 to 6 months before this may ease, or maybe it's only going to happen end of next year, right? Maybe we're going to see another year of sidewards, up and down a little bit, and it's going to take until 2024. But that should not kind of deter you from uh, starting to shop right now.
I wanna just piggyback off of everything you've said, Julian. One, there's so many friends that came to me and were like, "Oh God, I missed 20K Bitcoin. I missed 15K Bitcoin this time last year, and I wish I could go back and buy it." And again, nothing on here is financial advice, but what I tell them is, "Hey, you wanted those prices. Now is your chance." The same thing in the 2017 bull run when Bitcoin almost got to 20K. People were like, "Oh, I missed 3K Bitcoin. I had so much time. Why didn't I buy it?" And then Bitcoin sat between 3,400 and 4,000 for several months, and none of them were buying it. So what I would say is, if you believe in these assets long term, then don't try to catch the bottom, because as Julian was just saying, you won't know it's the bottom until you're looking back and playing Captain Hindsight. So Julian, I want to take that and tie it all back to an important message that you just shared with us about yourself, and it's being able to control your emotions, and how as a physician, that profession taught you to do just that. I have people that are very close to me who are physicians, which is why I was thinking, oh, was it the first year of residency that got you? Because the first year of residency is always so
Yeah,
tough. It really,
it
really
is.
breaks you down. But one of the things that I was taught by people that are close to me who are physicians was that you learn to compartmentalize. You learn to compartmentalize, and that ability, it permeates and translates into other areas of your life. And it seems like, you looking at big numbers, whether it's 10 million worth of Bitcoin last year, or whatever number you were looking at 4 years before that, you're like, hey, it could go higher, but this is a nice chunk of money, and this is life changing. Let me just take some off, de-risk, and it really enjoy some of this wealth that I've accrued. And I think a lot of people in the past, including myself, have had a hard time doing that, right? Because we let our emotions get the best of us. So where I'm leading with this kind of spiel is, for those that didn't have the luxury, or rather didn't have the opportunity to go to medical school and learn that skill, how would you say they can train their brains to do just that, right? To control their emotions in the face of so much hype and so much noise, and make the best objective and educated decision they can in that moment.
Um, an analogy that I always use is the seasons. I think a lot of people will kind of understand that analogy, but I'm gonna go down to a point that maybe people haven't really thought about. So again, I try to rationalize most of the things, and so for me, the fundamental question always is something more one directional, or is it actually more circular? Is it coming back? And for me, crypto markets, there's always these booms and busts, and this is and that's natural. And I think actually this is what makes it great to invest, because it if you're someone who can stay cool while the entire kind of crowd goes crazy, it's always gonna get you an upside. And so that's why I actually like this. I actually don't want to have boring markets. I do like this crazy volatile madness that's going on. And I know it's really difficult, but I really embrace it. So how do I approach it? I approach it from where I believe that it's cyclical. It's like we're gonna see right now, we're in a crypto winter. I think most people agree. And we're gonna see spring again. And then we're gonna see summer, and we're gonna see fall, and then we're gonna see another winter. So here's the key question I get so many times from people, and that is, how do you know that we are going to go into spring? How do you know? Like, what are the signs that we're in spring? And what people really want to know, right, is what is the very first day of spring? That's what they're really asking. So they want to know out of last winter, and depends on where you live, right? I live in Singapore. We don't have any seasons, but like when I was still in Austria or probably in North America, it's the same thing. It always kind of happens the same. You have a winter, and then like you have those days where everything kind of gets warmer, the snow starts melting, goes away, and you're like, oh wow, spring is coming. That's fantastic. And you kind of, I don't know, change your tires if you have to, like if you drive and you have to change your tires, and you know how it always goes. Suddenly, like you have this kind of flashback, and snow's hitting in, and you have this really big winter storm coming in, and if you're not taking care, it completely wipes you out. And so the point I'm really trying to make is if, since we all don't know when this very first day of spring actually starts, because we only know looking backwards, like we will only know, this was really when afterwards there was no more snow. Since you don't know on that day and you don't know going forward, you need to kind of stay disciplined with what the seasons ask for. And the winter season doesn't ask for being super aggressive with your storage, being super aggressive with your seeds, being super aggressive with what you have. No, winter asks you to be prudent. It asks you to do everything step by step. Sure, you can go out and you see a little bit of the sun coming out and you're throwing some seeds into the ground. Sure, you can. But it's a super stupid idea to go out there and kind of wasting all your seeds in this very moment. Like, it's absolutely stupid. And so you want to approach this the exact same way. You want dollar cost average right now. You don't want to double, triple down. You don't want to take leverage right now. You don't want to be uber aggressive right now. You just want to be super balanced. You be like, you want to be in a situation where you sit there and say, oh, crypto goes down another 30%. Who cares? Oh, crypto goes up another 30%. Who cares? That's the situation you want to be in right now. It's so essential to understand. Now, once you're going to see real spring. Now, how do we all know that spring is there? Well, because suddenly cherry blossoms, everything is out there, right? Everything starts kind of growing again. Temperatures are really, really warm. And you know what happens? You will always have those few people who got super lucky and they actually kind of planted their seeds on that true first day of spring. Or they were overly aggressive during the winter, but they just were lucky. They didn't know how long winter lasted, but they were just lucky that they got out and they had so many seeds in the ground. It's that time when people start talking, haha, I bought it, whatever, 12,000 and Bitcoin is now at 20,000 again. That's the time when you know, okay, now we're in spring. That's that time now when you want to get aggressive. And then you want to double and triple down. And that's that time when stuff is going to really fly. And now you need to understand that you need to have that faith that now it starts growing. You're going through summer, don't change your strategy during summer, and then comes fall, and you always know fall. You ignore it because you get blindsided how beautiful fall is, and you get tricked, and you're like, this is gonna last forever. Like you're sitting there, and Bitcoin is at 69, and you're like, this is never gonna stop. And it may not stop, right? You don't know. You don't know when winter's coming. It's the same thing. You know it is coming, but you don't know when. And so every once in a while, like fall goes into summer again, like, and then suddenly summer comes back for a little while. And you're like, this is gonna keep going, it's gonna keep going. But then bam, from one second to another, summer turns into winter straight, and there's no more fall in the middle. And so you just need to stay disciplined. And it the lessons are, I don't know, they are so obvious, and we all know them. It's just you need to kind of just stay disciplined. And at the end, I do think I'm better at that than most people. And why, I have no clue. Maybe there's something wrong with my dopamine pathways. What do I know? But I just have an easier time being cautious when other people are just losing their mind, and me staying rational and knowing that stuff will come back when everyone gets super fearful. So that season story always kind of sticks with me.
Yeah, and I think it's going to always stick with me, and hope it sticks with our audience members as well. Again, another great nugget of wisdom that you guys can take away from the space. This has been a great space so far, honestly, Julian. It's one of my favorites that I've hosted. And with that said, right, with those thoughts that you just shared, in your opinion, What catalyst do you believe will result in the next big wave of money flooding into this industry? And we at Whale Coin Talk believe that education is one of the main pillars, mass education. So, one, what do you think are the catalysts? And two, with respect to education, what do you believe is the best way to go about educating the masses?
I actually agree. I think education is super important. And I mean, educating the masses, it's exactly what you're doing. That's why I think it's super fantastic, that service that you're delivering to the entire community. Um, it Anything that scales from an educational standpoint is super powerful. Be it YouTube, be it a podcast, be it on a Twitter, be it, I don't know, in written form. I think it's just amazing. So that's what you want. I mean, to me, that catalyst, I do fully believe that that next catalyst is going to be um is more a flight from the current system into that decentralized system. The past kind of cycles was never really a flight. It was really more an attraction where people were like, "Oh, I want to get into this new shiny object." Um, Again, maybe I'm completely wrong, and I just don't see that new shiny object that's going to pop up in the next 1 or 2 years because so many things have already been tried. But these things that have been tried, be it DeFi, be it Web3, they're going to get super strong utility. And people going to start noticing that a lot of the current system, I'm not predicting that the current system is going to fall in the next 2 years. Really not. I don't think. I think the current system is still going to run for a very long time. I think way longer than people are expecting. But more and more people are going to get scared. And more people are like, you know what? So far, I've been playing 100% into that traditional system. Let me just reallocate, I don't know, 90-10. Let me put 10% into that new decentralized system. It's tested and tried now. Yeah, that SBF stuff, that's like years ago now. Everything's super decentralized. Everything is super transparent. Yeah, sure. Like I've not invested ever in crypto, but now, I don't know, let me take some of that wealth and put a few percent in. I think that's going to drive that. And it's going to be where people are really going to get pushed out of their current system. They're going to get scared. Like you said, they're going to be educated. They're going to start looking at the things. They're going to realize issues with the dollar, with the fiat system, and that's going to put an attraction there. They're going to see issues with the banking system. They're going to see advantages of having an open, decentralized system that cannot be censored. And I think that's that true driver, right? And so that's just what I see. And then of course, any shiny object that I'm not seeing right now, that's gonna pull it on top. But I think we're actually gonna see for the very first time a cycle that's a push cycle, not so much a pull cycle. And the last three cycles were really all about pulling. And I think that's going to be a very novum. I think that's going to be very interesting. And again, I'm not predicting this is going to happen tomorrow. I'm not predicting it's going to happen in 6 months, but over the next couple of years. And you want to have your seats in the ground. That's for sure.
A push cycle, not a pull cycle. Is this potentially the infamous super cycle that everyone was predicting last year? Why do you think that never happened? Do you think the space was just mature enough, or do you think it's the Fed coming in and being super hawkish?
Yeah, I'm not a. I mean, I know I used the term cycle here, but I'm not a. I'm not a big fan of the 4-year cycles or something. I just think it's cyclical, but I think it's impossible to predict the length of those cycles. So that super cycle thing is just to me the same kind of fairy tale than a stock to flow model or any kind of prediction model or astrology or whatever. I mean, again, I'm not a big believer in technical analysis or at the end it's not that these models predict the future. It's the future that actually writes those models. The charts don't predict the future. The future writes the charts. So to me, look, 2014, the collapse happened because of Mt. Gox. 2018 happened because all the ICOs collapsed. 2022 happened because of the Fed. Completely different things. Is it coincidental that this happened every 4 years? I don't know. I think we're getting fooled by randomness here. And I think we are just trying, we're humans. So we try to see pattern in stuff that there's no pattern in. And that's just what I think. So, and look, probably we're gonna see another one where I don't know, we're gonna see another upcycle in like 2023 is gonna be a bit of a boring year, in my opinion. 2024 is maybe the start again. And then 2025 could be the super hype year. And then, yeah, maybe 2026 is going to be another crash. And it's like, you see, Julian, we have those 4-year cycles. And I know maybe the 2025, 2026 crash happens for completely new reasons again. And people are still going to see a pattern. And I'm just going to say, look, I'm fine if that's okay, but I just don't think there's a pattern there. So that super cycle theory to me was, I don't know, was ludicrous. I just don't think that there was any merit to it. I think it was just a really nice fairy tale that crypto investors love to pick up. And of course, it sounded nice, just like the stock to flow model. But I mean, there's absolutely zero evidence to it or zero merit to it. And yeah, the prices are made by supply and demand, and you cannot predict supply and demand of anything. Sure, I know I can predict the circulating supply of Bitcoin, but that's not the question. The question is, how much do people want that circulating supply? And that is just impossible to predict. So I think that's in this case, that demand's just going to come from yeah the economy and the existing systems having some struggles and people just realizing there's alternatives. There are ways to do this better, and that's what they're gonna uh, move into.
So we're coming up on the last part of the broadcast, and it's my favorite part. It's the "What are your thoughts?" segment. So Julian, uh, to start, what are your thoughts on Bitcoin? Do you think that Bitcoin is ever going to be flipped by Ethereum? And also, do you believe that Bitcoin will always be correlated with tech stocks? Right? Give us your high level breakdown, please.
I don't see Bitcoin as a currency. I don't like that term cryptocurrency at all. To me, it's an asset. To me, Bitcoin is either an insurance policy against the centralized system, or it is a very low risk correlated asset for the entire crypto industry. Other than that, I think Bitcoin lacks a lot of utility. And that is why in my personal portfolio, I don't have much Bitcoin. However, in our company treasury, I want to just make this very clear. And our company treasury is really, really I mean, at the peak, we had over $100 million in Bitcoin. Obviously, that went down just like everything else. But so, I mean, super solid treasury. Bitcoin is by far the largest part in our crypto treasury. So I just want to put some color to that. And the reason for that is very simple. In my personal portfolio, I want returns, and I just don't think Bitcoin is going to give that to me. I think other coins are going to give that to me. In my company treasury, I want to have the lowest risk crypto asset, and that to me is Bitcoin. So are we going to see a flippening? I am if you give me, let's say, until 2030, I would give it a very, very, very high probability, probably over 90% that Bitcoin is going to get flipped. I think the asset that's going to flip it is Ethereum. And the reason for that is just very simple, because Ethereum is just extremely useful, has way more possibilities. And the only reason why I would not say it would get flipped is if there was such a catalysmic event where Bitcoin as this insurance policy just trumps anything else. If that's not happening and you give me until 2030, I'm fairly confident Ethereum is going to flip it. Are we going to see a decoupling of tech stocks to crypto as a whole? Um, Maybe. That's going to be an interesting one. I Again, I'm not sure about Bitcoin per se, but I think some of the cryptocurrencies that can create utility in themselves, where they can evolve, where they have upgrades and hard forks and become way more useful and can adjust to certain trends. And Bitcoin can't do it, which it can be very good and can be not so good. Um, I think they can decouple. And I think that's possible. I mean, with its good and bad things. I mean, we have seen a decoupling in November, but we have seen a decoupling in a very bad way where stocks had one of its best months or one of their best months, and crypto had one of their worst. So, yeah, I hope if we see a decoupling, we see it in a very constructive manner.
So, Julian, I want to get another impromptu question because you mentioned it. Not financial advice, obviously, but what are you buying? What are you allocating in your own personal portfolio?
I am very public about that. I have it on my Twitter as well, so full transparency. I mean, one is Ethereum. I think um, it's it's the largest kind of developer ecosystem. It's extremely useful. It's going to be very difficult for, in my opinion, for any coin to kind of compete with Ethereum. And my actually largest crypto position is DeFi chain. I mean, I contribute my time in this. I bought all those DeFi myself. I believe in DeFi. I believe in Web3. The value proposition for DeFi chain is to build DeFi and Web3 into Bitcoin and also into Ethereum. I know that Ethereum can do a lot by itself, but there is merit to having side chains or additional layers. I mean, Polygon and so on have shown that. And so having that kind of agnostic gateway into Bitcoin and into Ethereum, that's going to be very powerful. So that's just where most of my money sits right now. I do have a little bit of Bitcoin in my personal portfolio. Again, it is by far the largest position in our crypto treasury in the company. And the second largest position in our company is Ethereum. Yeah, so reason for that is that I just think that those cryptocurrencies, while being riskier because a lot more things can go wrong, um, they have the possibility to actually adjust, to adapt, to and and again, with it good and up and bad sides. And so I'm just someone who always looks at the number one thing that you want to look for is being useful, and the same applies to a cryptocurrency. It's not about how scarce something is or how rare something is. It's really about its utility, and Ethereum's utility is just incredible. I think DeFi chain's utility is incredible. I think Bitcoin's utility can be extremely important if in its right environment, but Bitcoin just doesn't have the same kind of possibility. And then look, there's a lot of coins that I know that other people really look forward to, and I think they can be extremely useful. I just didn't have as much time to kind of focus on that. And I do have probably like 10 or 15 other smaller altcoin positions that are maybe, I don't know, 1 or 2% in my portfolio. But it would be really unfair to kind of mention them right now, because then I would have to kind of really go through all of them. So I really want to focus on the 2 to 3 really large ones.
Certainly, and that's fair. And thank you for sharing with us. And as Julian just mentioned, audience members, you can go and check those out on his Twitter. I think he mentioned that he publishes his full portfolio there. Am I correct in understanding that, Julian?
Yes, correct.
Okay. So on the topic of Ethereum, and we've talked about it a bit now in detail, but I wanted to ask specifically, right? We've talked about all the value prop and the potential it has. The ceiling is so high. What do you think about the merge? Do you believe it was the right decision?
Definitely the right decision. I don't see why it wouldn't have been. I think, and I think it was absolutely fine. I mean, again, I wouldn't have anything else to add there. I think the interesting question for Ethereum is going to be, and that's going to be a bit of a like there. I think there you're going to see how much of a business sense is Ethereum, let's say Vitalik, or I don't know who's going to drive that decision. How much of a business sense are they going to have with at what point are we allowed to unstake? Um, and at what speed? What's the timing of that? Is that going to get adjusted to the market cycle a bit? Are we going to start the unstaking during an absolute bear market when like really there's no one buying anymore? Is then this additional selling pressure coming in? Or are they going to rather time this a bit and realize, okay, I don't know, maybe I don't know, Q4 could be a bit of a more bullish month next year, a quarter next year. So maybe at that point, they're going to start the unstaking. So that's going to be a very interesting one. And again, with that, I'm saying while having this kind of flexibility, you have risk, right? And so if you don't want to have that risk, don't be in Ethereum, be in Bitcoin. So, but that's going to be a very interesting one because you obviously have a few kind of screws to kind of adjust that and as a whole there.
A lot of people argue that the move to proof of stake is going to make Ethereum more centralized as far as who controls the voting rights, who controls the nodes, right? With proof of work, when you are mining, you have to then dump Bitcoin on the open market in order to cover those mining costs, cover those electricity costs. It makes for a more distributed allocation of Bitcoin. Whereas with Ethereum, you stake what you have, it gives you rewards, and you can restake them, and it kind of creates this kind of unequal or right big divide between who has the most and who has the least, and it's because a lot of the Ethereum is staked in Lido or Coinbase or Binance. These voting rights just become uneven, and again, there's a risk for a 51% attack.
I mean, I think as long as Ethereum cannot be unstaked, I agree. I think there's definitely a heightened risk on that. So that could be a bit of a pressure point if there were some issues that then Ethereum really had to move and make it easier to unstake. But once like Ethereum allows unstaking, I don't follow that argument at all. Because sure, I mean, it is possible to, if there's like larger staking pools, that then coins just get confiscated and people lose their funds. But that doesn't have anything to do with uh, like running a 51% attack, because the rest of the network would just simply ignore, ignore those blocks. It's the same as in Bitcoin, where if there were, I don't know, a 51% attack, I mean, now not from China anymore. I think the US could actually do it right now, because I think more than 50% of the hash rate is in the US. But let's say back then in China, that was kind of always theorized. How would the Bitcoin network defend against the 51% attack from the Chinese miners? And the way it just would happen is you would just ignore those blocks. So it's actually relatively straightforward. Obviously, right now, definitely heightened risk on the Ethereum network. I would expect that, let's say, in a year, this should be mitigated completely. Are we going to see some 51% attack until then? I would probably put that probability under 5%. I don't see this as a very likely outcome. Is it non-zero? No. But yeah, I also, I mean, again, you could also fork someone out right now. It just, yeah, yeah, these are just my thoughts. I mean, and again, if you don't want to take that risk, then take Bitcoin.
Yeah, I think it's a fun debate to unpack. Ethereum is also my biggest holding, and Bitcoin after. But Binance, let's talk Binance. They remain a juggernaut in the space, and their influence just continues to grow. I mean, CC's done amazing things so far in his career with in the industry. What do you think about Binance? Do you think that they have a bright future? Are they in trouble with kind of all the news have been coming out about exchanges being insolvent, or rather having not having the reserves to back up their liabilities? Give us some more insight into that, please.
I So I would be super surprised if Binance weren't honest about having customer funds. I mean, but then also, I mean, I think end of October I would have said the same about FTX. So um, I but I would be super shocked if Binance didn't have that. So I think CC has been the mastermind. I don't think CC kind of willingly took down FTX, but I think he has just been really masterminding through all of this. And I think he has just been a very, very good decision maker. And in all of that, I think, especially if you live in the Western world, you sometimes underestimate, uh, yeah, how Asian, Chinese kind of decision making is very, very different from sometimes how the Western world kind of works. And sometimes being a bit more in the shadow, not trying to kind of be doing it big up front, this kind of fake it till you make it. Yeah, a lot of that in the kind of Asian culture is not there, and and then really make it count. I think where Binance is definitely gonna, or what Binance is definitely gonna feel is, at the moment, everyone is just super happy that Binance is doing a good job. But at some point, this Goliath effect kind of comes in, where people just want to start betting on Davids, and they want Goliath to do worse. And I think Binance will definitely feel this. They're going to feel this from the regulator. They're going to feel this from customers. They're going to feel this from investors. They will definitely feel that. Now, that doesn't mean that David will always win. Actually, not. Most of the time, Goliath wins. And if you would ask me to bet on one of the large exchanges right now, that are, in my opinion, really up there. I mean, obviously, Coinbase is there, Binance is there, I think Kraken is there, and these are the large exchanges. Then I think, besides betting on my own company, I would probably bet on Binance. Just it seems they're on a very, very solid kind of footing, and so far everything they're doing seems to be super solid. I think what made them win has just been being flexible in how they approach regulation. They did a lot of regulatory arbitrage very efficiently. And where do I see weaknesses? I think it's also the weakness side. I mean, I still struggle to believe that the way they are structuring their company in such a decentralized manner, whenever you talk to an employee there, and again, all of what I'm sharing here right now is, you can just talk to a Binance employee and you're going to hear the same answer, is no one really knows anyone else. Everyone is like super kind of decentralized. It's kind of in their own little ecosystem. And I don't know. I just don't think that that is how organizations really function. People need connection. People need to kind of have this belonging. And I don't know, struggle a bit there. Binance has a fantastic team. I mean, I know some of the senior leadership there. I've met CC a couple of times. I by no means am like a personal friend of him, but I've met him and his senior leadership a couple of times, and they are, I mean, like you can see, I mean, they're really, really strong people. So um, I think the key thing for them is going to be, are they going to be able to keep that culture? Are they going to be able to kind of be that Goliath and not like get cheered on, like, or get cheered against by everyone because everyone starts betting on David. So I think these are the key kind of things that I would be watching.
Stable coins, right? There's so many different kinds of stable coins at this point. We have centralized stable coins backed by reserves. We've got decentralized stable coins backed by either Ethereum or yield-bearing assets. We've fractionalized stable coins. What are your thoughts on stable coins first and foremost? And then which stable coins do you believe will ultimately come out on top?
Yeah, very interesting question. I mean, so I've been very critical of Tether in the past. I think the number one reason why I was critical of Tether was not so much because of Tether, it was more because of how Bitcoin fans reacted to Tether in a sense where they were very supportive, kind of breaking their own principles of don't trust unless you can verify. And with Tether, it was more like, you trust them because they say so. And that made me super skeptical about Tether all the time. Um, that changed a bit now that we have high interest rates, because now Tether, even if they were only kind of fractionalized, like if the backing was only fractionalized, I think now there's just very little incentive for them to do anything goofy, and I think it's very unlikely that Tether has any issues. We in our company treasury hold no Tether or no material amount. I don't want to say none because we have Tether in on the platform, and so we definitely have a few in our treasury, but no material amount is of our treasuries in Tether. All our stable coins are in USDC or in PAX. And then so USDC, from everything that I see is solid, and then PAX and also BUSD, Binance USD, which is a white label solution from PAX, I would assume that they look really good. Stable coins there are a pure regulatory arbitrage, and once that regulatory arbitrage is gone, it's going to be very interesting to see how that kind of future is going to be, because at some point it's just going to be seen as e-money and it's going to be regulated like a bank. So, and I think most jurisdictions kind of go this route. On the algo stable coins, yeah, I mean, obviously after UST, it just became quite questionable. I mean, there's also always some worries around make a die. Is that would make a die make it without USDC? And a lot of people always say the only reason make a die is stable is because of USDC. I involved with DeFi Chain, and DeFi Chain has a native stable coin which is called DUSD. That thing is T-pegged at the moment, so it is trading off $1, but it's stable at where it is. The reason why it's stable at where it is but it's T-pegged is because there's no natural arbitrage. The arbitrage is super slow, so you cannot arbitrage that out. It's actually the exact same thing if you kind of want to understand this. It's the exact same thing as the Grayscale Bitcoin Trust that is trading at a discount and no one is arbitraging it out. And so that's exactly the same thing. There's just no arbitrage mechanism. And so the way to kind of solve that, and the reason it kind of depegged was just because of the shock with UST, those slow arbitrage mechanisms that take very long, they weren't quick enough. And then it just kind of compounded from there. And now it's depegged. And now what it needs is it needs all those slow kind of arbitrage mechanisms to kind of bring the price back to $1, which it will. It just takes a little bit of time. So what's my vision of the future? I mean, I think fiat-backed stable coins, they're going to get regulated just like money. The algo stable coins, that's where I just think there's going to be a lot of future in there. And at the moment, they all kind of got thrown out like a baby with bathwater because of UST and with Terra Luna. And I think if you ask me, probably in a year or two, the algo stable coins are going to be where today USDC and USDT are, and USDT and USDC or PAX and BUSD are going to be just where e-money is. So I think that's kind of the natural kind of progression there. And then, but that still means that on the algo stable coins, we still, like as a community, we need more research. We need to have better ideas. We need to have arbitrage possibilities that don't kind of destroy, but then still allow for faster arbitraging. So that's just what I mean, I'm super bullish on algo stablecoins over the next years. It just needs a lot of fixing and yeah, and just a lot of help. But then obviously on the fiat backed stablecoins, I mean, they're fiat backed, and I just think they're going to go the e-money route.
CBDCs, Julian, are they good? Are they bad? Are they inevitable? Give us your breakdown.
Inevitable in my opinion, because they allow the government to bypass a lot of the middlemen, actually put the users, in this case, its citizens, directly under control. So I think for the government, there's a lot of upside. Some of the businesses will really promote it because it's gonna remove a lot of this archaic infrastructure that the banking world is built on. So fintechs, they gonna love that as well. I mean, you see this in China, where the government is pushing this out, and a lot of businesses, they're really quick on adopting it because they're like, oh, finally, I have like this super fast backbone that I can implement with. And to me, it doesn't matter if this thing is completely decentralized or not. I'm just a business, so I just want to kind of implement that. So that's going to be, in my opinion, the kind of thing there. The question really is, how much privacy do governments get people with the CBDCs? How much control do they keep? Um, that's going to be, I mean, yeah, it's going to be very, very tricky. I my co-founder Yuzen, he was the chief architect for the Bahamas Cent Dollar, which is a CBDC in the Bahamas, and that was prior, and it was in 2018 before we started Cake, and so he did that there. And yeah, I mean, he's an absolute expert on CBDCs, and he says the same thing. He says CBDCs can be a blessing for people, and it can be, yeah, the absolute Trojan horse where yeah, where the government just has full control. Um, if CBDCs come extremely aggressively, that would really require a lot of education for people to being able to escape and go into decentralized alternatives. I'm not sure if people are going to be quick enough, fast enough, if they are actually capable enough to control their own private key, or if they go to centralized kind of platforms. And then it doesn't really matter if you are on Bitcoin on a centralized platform or you're just on a CBDC. So um, I personally just really hope that CBDCs take way longer. I hope that some countries actually solve them in a better way. To me, that's more like, why risk it? I would rather have the current fiat system. I would rather have digital money right now. I'd rather have a corrupt central bank that kind of screws around there and and have that right now, leaving with the status quo, and having a CBDC that is, yeah, a totalitarian dictator's wet dream if that goes kind of wrong. So that's kind of my situation.
Julian, NFTs. I've been a gamer my whole life, and I think that there's so much potential, tremendous potential, with taking a game that is first and foremost incredible to play, that makes people want to spend time on it, regardless of whether they're getting paid or not, but adding that icing on the cake, whether it's asset ownership, whether it's taking a utility token that is minted through playing the game, not just done through a sale, but through playing the game, and really making taking these shadow economies that we see in Web2 gaming and finding a way to capture that value through a proprietary NFT marketplace, for example. So I'm bullish Web3 gaming, but I think it's still in its infancy. But I want to know, you mentioned at the beginning as a medical doctor that you saw the potential of having medical information on the blockchain. So what industries do you believe we will see true disruption in as far as NFTs go?
I'm extremely bullish on NFTs. I am not bullish on the NFTs that we've seen in the kind of past cycle. Maybe on a few, because they're really going to drive status, and that's going to be the form of utility. So it's those few where you really kind of have those melancholic kind of memories from that crazy time. But the majority of those NFTs I wouldn't be bullish on. However, I actually think we're seeing exactly like you mentioned, we're seeing a new kind of wave of NFTs, where NFTs are connected to the physical world. Um, and I think that's going to be very interesting. Obviously, the gaming side of things. I think connecting NFTs with DeFi, this NFT fi, how it's called. I think that's going to be an interesting kind of direction, especially if you can digitize physical things via the NFT world, and then have DeFi around that. Now, I understand that concept of non-censorship, those concepts of not being able uh, to steal something, and having full ownership. Obviously, is always a bit difficult with like physical stuff. However, having that digital world around it, that's where I believe there's going to be a lot of innovation and potential. Um, Things like medical records, the main thing that I just noticed in 2014, it's just going to need a government or hospital association or insurance company to kind of take this. So I'm not sure if this is going to be done by startups. But as you mentioned, I think gaming, a lot of the uh, I think memberships, I think that's going to be a major thing. I see a lot of ideas around memberships. I mean, Bored Apes, they kind of went this route, but I think there would be so much to kind of build on top there. So, um, bullish on NFTs, not so bullish on the NFTs that we have seen over the last 2 years. Very bullish over the years to come.
So I want to talk regulation. I think that regulation is also inevitable, but there's regulation done right and there's regulation done very wrong. So where do you think that the countries like the United States, for example, where do you think those countries are lacking, and how can we improve? And which countries do you believe are doing regulation right? I mean, I was just in the UAE a few months ago, and they seem like they're very future focused, and they seem like they have designed like a regulatory framework that welcomes innovation and lets builders build while also adhering to the laws that they've set in place.
Well, yeah, I mean, look, Singapore, that's why I'm here, right? I moved to Singapore because the crypto regulation was so good. Then I stayed for the quality of life. I think Singapore still has a very, very good approach to regulation, slightly different than how the UAE does it. I think the UAE has also done a good job. Europe is trying to kind of get a regulatory framework with the MiCA license. The issue the US just has is there is no crypto regulation in the US. There just isn't. So what the US does is they go and say, oh, what are the existing kind of things we have, be it security law or be it a money transmitter license or be it a brokerage license, and they just try to kind of like stick those labels to crypto. And I think honestly, that's the major issue. There is no concept of a custody license in the US. This concept of okay, custodying Bitcoin is just completely different than um, storing anything else. So it needs completely different things. It needs different. It allows for different things, and I think that's the number one issue. This issue always around security law. I mean, I don't know. The first thing always about the US is, oh, is this security? And I don't know. I think that's just ridiculous. And that issue stems from there not being actually any kind of regulation that you can hold on to. And I think if you're asking me what's the biggest weakness the US has is exactly that. And I mean, that huge discussion with SBF and Eric Voorhees, I think what, a month ago, 6 weeks ago, was exactly around that, where Congress, I think, wants to come out and have some regulation for the very first time, in my opinion, or to my knowledge, that is actually targeting crypto. And I think that is the reason why the US is such a hard place for crypto companies, because it doesn't really have a separate set of rules for crypto. It just kind of uses existing rules for everything else, and it just kind of applies to crypto. And I think that's so difficult. So am I against regulation? Not at all. I'm against stupid regulation. I'm against over regulation, but I don't think any regulation is perfect. Like I look at Singapore, are there a couple of rules that I think are ridiculous? Yeah, totally. Like I think it's ridiculous that in Singapore, like from the very first dollar, you have to do full KYC. That means proof of identification, proof of address, and so on. I mean, you have to do this for $5. To me, that's ridiculous because it doesn't apply in Singapore to any other rule, right? So there's cash cards here that I can put. I don't know what the limit is. I think $500. I can put $500 on this cash card. I can give you that cash card, and there's nothing wrong with that, right? So in theory, I could launder $500 that way. But everyone kind of with common sense says, yeah, I mean, sure, someone could launder $500 with that, but I mean, what's the actual harm that could be done, right? So yeah, I mean, it's sure, I mean, some harm can be done, but kind of risk reward here, kind of let's not stifle innovation. But in crypto, they haven't done that. And I voiced that like very clearly to the regulatory body here. And I think a lot of companies have. But the regular party here says, no, we're going to do this with crypto. Fair. Okay, fine. Like, sure. Do I think that's great? No. However, there's a lot of other things where Singapore is just extremely forward thinking. They're really pushing towards that segregation of funds very early on. That was very key for them, right? That segregation of customer funds and company funds. That's super, super strict. The way how they see, they very early on, they called Bitcoin and these things DPTs, digital payment tokens. So a completely new kind of construct. So very clear that this is not a commodity, very, very clear that it's not a security. So these are just things that make it very easy to do business here. And the UAE has done something very similar. The UAE on some things, in my opinion, they are maybe a bit too lenient. If you're a bit too lenient, many times you attract actors that don't take it too serious, and then that may have some secondary consequences a bit down the line. So it's just always Europe has this. Obviously, in Europe, a key thing in Europe is always data protection. So a lot of the crypto kind of law with blockchain, that's where you cannot destroy the data, was just like quite tricky with data protection there. And then obviously in Europe, you have, I don't know, 26 countries. I don't even know. A lot of countries that like have different laws and different kind of ideas. And now you kind of need to unify that crypto regulation there, right? But is that perfect? No, but I think at least they have something, and I don't think it's a terrible regulation. So I think if you ask me, what is it that I would hope the US gets done in 2023, which is super unlikely, but I hope, is to have some regulation. I hope there's no like over regulation. I hope they're not going to touch DeFi, and I hope they don't try to regulate DeFi. I hope they just go and say, okay, let's kind of define what a cryptocurrency is. What is Bitcoin? What is Ethereum? What is required for these things not to be seen as a security? Because at the moment, it's like, oh, Gary Gensler tries to get everything for him, right? And it's like, oh, like everything belongs to me. And I don't know. I'm not sure this is correct. And using I don't know, how old is the Howey test? 100-year-old test to me is it's just weird, right? So I don't know. I don't know how relevant like that land law from Florida from 100 years ago is how applicable is that in growing crops on there, and how applicable is that today to digital payment tokens. So I don't know. Again, I'm definitely not a lawyer. I just look at this with my little bit of common sense, and I'm like, yeah, I don't know, 100 years ago, totally different problems than like this stuff on the internet, digital kind of decentralized asset. And so I think that's a bit of the issue. And yeah, and I also think if the US doesn't speed up there, you're gonna have a lot of companies like Binance, us, with Cake and many others who are just gonna speed ahead. I mean, go for it. I mean, I'm fine with that. I just think that it's really I in general I would prefer innovation. I would prefer clarity, and yeah. So that's just where my stance on that is.
Yeah, the leapfrog effect, huh? The strength of any regulatory regime, it really depends on builders and regulators coming together and making these laws, implementing these laws in the collaborative manner. It's not something that we've done yet in the U.S., right? Like you put it, we're trying to paint crypto with an outdated brush, and it's not working. And I hope that we figure things out soon. Otherwise, innovation will leave a country that has put out such paradigm shifting innovations over the last 200 to 300 years. So, completely agree with you on that, Julian. One of the questions I wanted to ask you, because you mentioned Singapore several times, and you just told us why you moved there. You said it was you moved there because of the crypto tax laws. You stayed because of the quality of life. What are some things that you love about Singapore? Because I mean, you're not the first person that's told me, "Hey, I moved to Singapore. I love it here. I'm not going anywhere." What are some things you love about Singapore? Why is it so great to raise a family there? And also, is it easy for anyone to just come and decide, "Hey, I want to pack things up. I want to come and start a new life in this country"?
Um, so I think Singapore is a very interesting example for great decision making. And I really mean this. Singapore had a prime minister for a very long time. He was called Lee Kuan Yew, and he's kind of the father of the entire country, of the modern country, and he reigned the country for a relatively long time. Uh, some people say he did this in a more dictatorial kind of way. I would disagree with that. I think uh, people just really saw the advantages of how well the decision making was, and people just supported that and were absolutely okay for him to reign for such a long time. And and I mean, to my knowledge, there had never been any kind of uh, issues with the voting system here. So it was just the decision making has just been absolutely outstanding. And so I would love to kind of take his principles in how he shaped that country. And so the reason you can see this is Singapore is the only country that's at the equator or close to the equator. It's actually at the equator, but close to the equator, that has no natural resources, but it's one of the wealthiest countries in the world. So how did you do it? Well, number one thing that you need to do is you need to get rid of corruption as much as possible. So you want to live in a place that has as little corruption as possible. Now, you're never going to have zero, but you're going to have low corruption. And so what Lee Kuan Yew just did, he went in, and at that point, there was a lot of corruption in the country. And he just went super aggressive with like very strict laws against corruption. And again, some of his critics may say that he was overly harsh and some of the penalties were overly harsh. Fair. But I mean, he got rid of the corruption. And so that's the key thing. So if you live in an area that just has very high corruption, the value that that area is going to produce is just never going to end up at its people. It will always kind of sicker to just a few. And so the fruits will never be kind of enjoyed by the people actually being useful, but it just kind of sickers everywhere else. So that's the key thing. The second thing he did was he wanted to be sure that there was this physical safety. And so you're going to have this in all of Singapore. Um, I sometimes have such issues travel to other places because I have this really false sense of safety in other places, which is just not existent. I don't know, here in a coffee shop, I would have no problem going to the toilet, leaving my phone on the table and just leaving my phone there, leaving my backpack. I mean, I wouldn't even think twice, right? I mean, maybe I'm like just naive, but yeah, I don't know. There's just so like that safety. If my wife goes out with the kids, I wouldn't even have close to my mind that something would happen there. Now, that comes with a downside. The downside is Singapore is extremely strict with its laws. The punishments are just absolutely brutal. And also, I mean, it does a lot of surveillance, right? So everything has flip sides. So maybe it's too extreme, fine, then take a flip side to that and maybe soften that a bit. So these are kind of fundamentals. Now, the next part is and now this is where it gets really crucial. It's and I think a lot of countries kind of manage to kind of initially get rid of corruption and have this super strong safety, but then they lack that third part. And that third part is you want to attract capital and you want to attract talent. So key. If you are a country that believes that foreigners are bad, you're going to lose. Because if you are any country, it doesn't matter if you're the US or if you're China or you're a super tiny country, there will always be more people outside of your country than inside. So the probabilities of there being extremely smart people outside of your region is just super, super high. So you need to find, and Singapore is just super methodical about this. You need to find ways and algorithms in how you're going to allow people in that are bringing value, and you have to try to make sure that those people that want to actually steal value, that they don't come in. And so I think Singapore has just done a very, very good job on this. So they every year they publish on their government website like what are the backgrounds of people that they want to attract. It's always tech, it's always engineers, obviously always kind of skilled professional people. But then also that's also key, right? They also know that they need people who just really help with everything in the country. So if you are a worker, if you're someone that just does a lot of the actual physical work, right? Which again, people tend to forget that. Like there's a lot of like nurses, right? I people underappreciate a lot of this work, right? The physical work. So nurses, for example, right? They want to get those in. So again, I'm not saying that a nurse is an unskilled person, but it's a lot more physical, right? Construction workers and so on. So a lot of these Singapore wants to attract, and so it's and with that it wants to attract a lot of capital, and so Singapore just has done a really good job there, and so the results from that is that Singapore has a very entrepreneurial ecosystem, a very business driven ecosystem. It is that the tax law is structured in a way where it wants to attract capital, it wants to invest. Um, so where I feel a lot of other jurisdictions, for some weird reason, they want to sometimes drive away the really talented and skilled people. They want to drive away capital. The government here is extremely lean. Everything in the government gets automated as much as possible. Where most other governments feels like they want to add as many people as possible. They want to be as fat as possible. And Singapore knows like people shouldn't actually be working for the government. They should be working for a lot of businesses. And so, or they should start businesses. And the results then are you have very skilled, very smart people. You have a very safe ecosystem. You have, with that, obviously, you have very wealthy people who give back to society, who invest. The healthcare system is state of the art. You have really great schools. And so you attract a lot of families. You want to have a very tolerant and open system. Singapore like has four kind of belief systems from a religious kind of standpoint, right? You have the atheists, you have Catholics, you have the Muslims, and you have the Indian, and and Buddhists as well. So you have like all those four kind of large belief structures, and Singapore just managed to have a culture where this is very tolerated. And so, is it perfect? No. Do I think that other countries also do it well? Yes. Do I think Singapore has figured it all out? No. Every once in a while, something frustrates the living crap out of me, and I'm like, yeah, okay, but you also have the upside. So um, that's why myself and the family lives here. And it's a separate decision from our company. So we have the company here just because it's a great place for the company, and we live here because I feel it's a great place for a young family like myself.
No one is perfect, but it sounds like overall it's a net positive. Singapore is doing it right, and a lot of other countries, again, not perfect, but net positive. They're doing it right. Julian, we're coming in towards the end of the AMA. I wanted to ask you a few more questions before we send you off. The FTX disaster, I believe, and many believe, was a necessary bandage to get ripped off. We needed it to happen for more transparency from centralized entities, right? We're seeing proof of reserves being published. We're seeing proof of liabilities going to be published very soon. I think a lot of exchanges have said their proof of liabilities will come out in December. So, do you think these are enough? And also, what do you think needs to happen? Because I personally believe there is always going to be room. And I'm a you, let me preface with I'm a big believer in not your keys, not your coins, of taking ownership of your own assets. I love decentralization. I love DeFi, but I think that there will always be a place for CeFi and centralized exchanges in this industry. I've been very vocal about why I think that is. Michael from Shrimpy kind of dropped that knowledge on me a while back. But what do you believe needs to happen on the centralization, or rather the centralized entities, whether it's regulation, whether it's more transparency, what needs to happen for them to exist and for people not to get wrecked the way that they did this time? Or Mount Gox was, I think, a different animal. FTX, I don't think the industry's seen anything like it before.
I mean, those two terms that I would really kind of highlight here is that concept of C DeFi. So that means if you are more a yield generator or more a yield platform, an investment platform, like for example, Cake is right now, then like you want to have a centralized front end, regulated, hand holding with the customer support. It is custodial, so you don't control your private key, but and that's the key thing. You want to have that transparency on the back end. And so if you actually look at how we had designed our product, our company 3.5 years ago, it was all centered around transparency, always has been, always will be. If FTX had been transparent, sure, SBF could still be fraudulent, and maybe he would have still been able to steal some money, but we all would have seen it probably, I don't know, 2 years ago. I don't know, maybe a year ago, maybe 6 months ago. Who knows at what point did he take that turn? Um, we would have seen it right away. And so that's, in my opinion, also that future for a lot of those things. It's the CDEX. So that CDEX is the mix between a centralized, decentralized exchange. So all these exchanges are going to need to have privacy, transparency features. That's going to be required. And I do actually think if, and I think the standard in the future is going to be that you publish the cold storage addresses, or generally the addresses of the assets, and then you're gonna publish probably on a daily basis or something, the Merkle proof of your liabilities, and maybe once a quarter you have an auditor come in, who audits that all your leaves, so the very bottom of that Merkle tree, that basically the accounts, that there's no negative accounts in there. It would be ideal to have a full kind of liability audit, but I mean, we have done, so with our company, we've done a PCAOB audit last year because we wanted to get listed in Q1 of this year at the Nasdaq. And with everything ready, we were valued about $3 billion, and we did a full PCAOB audit. That's that audit that Coinbase has to do on a quarterly basis. We had to do this on an annual basis. It's so difficult to do, and it's so much work. It's so expensive. And if that becomes the requirement for all the companies, I mean, that's just gonna stifle the entire kind of space. Only a few companies will be able to afford this, and it's exactly the opposite of what we as a space want to do. So what we rather need is, we need to send the entire kind of Merkle tree on a probably quarterly basis, send this to an auditor. An auditor can actually look at the data. They can verify that none of this data has any negatives in it. The reason you don't want negatives is because that way you could completely reduce the liabilities. So let's say you would have 2 billion in liabilities to your customers, but then you put this one negative account in there that has a negative 1 billion, bam, suddenly you only have 1 billion in liabilities, and you could easily kind of screw around there. And that's exactly what uh, Kraken kind of criticized Binance for, when Binance said they want to publish their Merkle tree. And now Binance wants to do the entire kind of audit. And I think that's a bit of an overkill. I mean, it's great, but a bit of an overkill. I think the standard is going to be, state of the art is going to be, addresses are known, daily Merkle proofs, and then on a quarterly basis, an auditor comes in and says, "Yep, you're right. No leaf was used, no account was used that had a negative balance. So the audits are, so the liabilities are are actually representative." And I think that's going to be the state of the art. And if you don't do that as a platform, um, people just not going to use you, and they're gonna see a big risk. And again, I also don't see so much of a difficulty there. I mean, the whether I mean, really, what's the difficulty? I mean, an auditor that goes in and just says, yeah, there's no negative leaf in there. It's super simple to do. I mean, it's a mathematical kind of check, and maybe at some point we figure out how to actually do this even better. Maybe we don't even need an auditor at some point. I mean, that would be very interesting. But yeah, so that's kind of the the key thing.
Julian, we are closing in on a 2 hour space. As I mentioned earlier, this is one of my favorites. I've really enjoyed having you on, and I definitely want to have you on again in the future to discuss more niche topics and even discuss what you're building in the space. I think it's really important. Before we send you off, is there anything that I haven't asked about that you're excited to share with our community? And also, is there a nugget of wisdom that you want to leave us all with before you head off on your day today?
I think I shared everything along the way. I think the only nugget of wisdom that I really would love to leave everyone with is, remember a year ago, prices were, I don't know, 60,000, and everyone was convinced we're going to see the 100,000, and like no one thought about selling. And right now, everyone sits there is like, ah, you go on Twitter or someone, everyone's like, ah, we're going to see the 10,000. So for some reason, everyone right now is completely convinced about the other side. So it's never as awesome as it feels like during the bull runs. It's never as terrible as it feels like during the winters. And so it's those of us that stay warm during the winter, stay cool during those crazy times, that are going to win in the long term. And so that's just really what I obviously want to leave you with. I would love if you check out our company, go to cakedefi.com, look at what we have there, obviously. And yeah, other than that, I think one of the key things always is focus on your health, physical, mental. Um, there's yeah, no money in the world is gonna uh, like ensure that you have calm nights. If you can't sleep well at night, I don't know, change something. That peaceful mind is key. And um, also, I think one important part is always those healthy relationships, especially during the winter times. Make sure maybe you are in good relationships, but maybe you know someone who may be struggling, and reach out to them, ask them if how they're doing, catch up with them. I don't know, meet them for coffee or whatever, and just check in. I think it's more important sometimes than people believe. So yeah, and on that, thanks so much for listening for that for 2 hours. It's unbelievable. I thought we are just in for an hour right now, but it's two. You're right. So yeah, hey, love you all. It's really amazing. Wish you a Merry Christmas in case I don't hear you, and obviously Happy New Year. It's absolutely amazing.
Ladies and gentlemen, that was crypto pioneer and Renaissance man, Dr. Julian Hosp. Julian, thank you so much for joining us today. Whale Coin Talk community, thank you so much for being here. My name is Noah. You can catch us every day. We're always putting out AMAs. We're doing Twitter Spaces. We have our aquarium weekly episodes every day at 4 p.m. UTC. If you want to join the panel, DM me. If you want to have a guest that you are a fan of, come on, DM me. We're always open to ideas. Again, thank you so much